Crime and punishment and profits and prosperity. The next politically correct issue that's going to strike with lightning precision and fundamentally change America will be prison sentencing and prison population dumping. That's right. The movement, already underway for a decade, is ready to ignite. In fact, check out this. This is the cover of The Economist. It calls America the jailhouse nation. 2.3 million inmates. They cost $34,000 a year to house for a grand total of $80 billion. And this morning, Columbia University became the first university to divest from prison stocks. They say they'll never buy them again, but sellers are already ahead of them. Check out this chart. Corrections Corp of America. This stock has absolutely been getting crushed here recently. And the issue of unfairness or overly harsh sentencing versus the safety of the nation is going to be debated. It will be front and center for everyone to talk about. Right now, here's the thing. Americans are a whole lot more concerned about someone stealing their credit cards or even being hacked than they are about violent crime like being murdered. It must be said, the absence of fear is the key to a society advancing. It's the key to prosperity spreading. So the stakes are very high, and it will impact every single American. Let's discuss it. All right, guys, we got a great eclectic panel. My girl Hillary is back. So is Dan. How did Dan get back here? Hey, I'm Charles Payne, and you're watching Making Money. Let's officially introduce the panel. Our investment pros, Matt Welsh, Reason editor-in-chief, editor-in-chief. Hillary Kramer, she's back from Las Vegas. Won't tell us what she did, but she's back. A&G Capital CIO and president. Heather Hansen's back with us as well, trial attorney at O'Brien & Ryan. Dan Schaefer, CEO of Schaefer Asset Management, and Matt McCall, founder and president of Payne Financial Group. Let's do it. Let's dig into the first real deal. All right, so let's talk about the legal aspects of these hurdles. Federal changes are certainly underfoot with the Obama administration. In many states also, a lot of moves to cut incarceration rates. Heather, what are we talking about here?
Well, we're talking about a whole lot of things, and it depends on who you ask, but definitely mandatory minimums. Right now, we've got a situation where if you commit a certain crime, you're doing a certain amount of time in jail no matter what. And people want judges to have more discretion. That's why judges have the job. They're supposed to be smarter than us. They're supposed to understand the system and be able to decide how long people are going to spend. And I think that that is something that everyone on both sides of the aisle can
We hear overcrowding places like California, which ironically started the three strikes you're out thing, which created a corrections union that became so powerful that the more powerful it became, the more prisons they built, but now they're reversing course too. How do they just dump prisoners? How do they just decide, okay, we don't have enough room for them, let them go?
Well, and that's what's going to be the interesting question, right? We're going to have to figure out a way to monitor them, because you don't want these people just wandering the streets. There's got to be a better parole system. There's got to be a better probation system, more ankle monitors, more for alcohol people, DUIs, that type of thing, more alcohol monitors, all kinds of different ways to make sure that we're keeping an eye on these people, but still emptying.
Matt McCall, why are you cringing? I mean, you got to wear all this extra gear. You worried about that?
No, I'm not going to laugh. It's very easy. Anybody that got caught selling marijuana or smoking marijuana, let them out of jail, because it's going to be legal very soon. So let them go out, because they're not harming anybody. If you had a violent crime or anything related to a violent crime, you should be in jail. But if you're not hurting anybody else, let them go.
You know, that's the irony. The 2015 Global Peace Index ranks America 94, like 93 countries are more peaceful than us. Now, it's one of these eclectic things, and one of the reasons we ranked so poorly, high incarceration rates and a nuclear weapon stockpile. So locking criminals up, Matt Welsh, how does that make America less peaceful?
Locking criminals up?
Yeah, they say we have such a high incarceration rate, it actually makes us less safe as a nation.
Sure. Imagine someone goes to Rikers Island and in an unusual case actually goes to trial, because there's a lot of people sitting at Rikers who are on low-level crimes waiting bail, because we have a really bad system here about how we treat lower-income people. We treat them as cash cows in the criminal justice system, which is terrible. But imagine you go to Rikers Island or someone, you're thrown into solitary, you come out. Are you going to be what do you learn in jail? You learn things that aren't going to make America a much safer place. When you over-criminalize, as we have done systematically, particularly with the drug war, this is the big wedge that has used our war on crime, then you're going to create a prison population. That population is going to get more sick, they're going to commit more crimes, and they're going to be disenfranchised. Talk about voter suppression. There's 5 million people in this country who can't vote. They've done their time. So right now there's a real bipartisan movement for criminal justice reform, and we better seize it.
You know, here's the thing, Hillary. We used to always hear about Eisenhower and the military-industrial complex. A lot of people say the modern-day version of that is our prison system. It's designed to make a lot of people rich and hold a lot of people back. And I do sense that the tide is turning. But economically, you know, we have to feel safe. If we don't go out, if we don't feel safe, we don't go to the mall. Letting about half of these people out, you think would be gooder for the economy or not?
It's bad for the economy. We need to keep criminals in jail.
What about someone like Matt said, though? What if someone stole $40 worth of wheat and got stuck in Rikers Island for a year?
Okay, so my answer there is no. They shouldn't be. They shouldn't be in prison. But we have a serious drug problem in this country, and it's going across all socioeconomic levels. In the suburbs, the heroin problem. We need to keep people in prison, and we need to keep our communities safe.
You need to get them
Sometimes
help.
that's the
Putting them in
only
prison,
way.
Matt makes a fantastic point. You get surrounded by other criminals, and you are not in a mindset of being a criminal. You're just a drug addict. You're addicted to heroin, come from a good family. But you're with those people for a year, you're now going to become a criminal because it's in your mindset. You're mad at the system. You're coming out mad. Get them help, put them in rehab. Putting in jail is not the answer.
Portugal decriminalized heroin. Portugal has fewer heroin addicts as a result.
But we need to be careful. I mean, look at the Charleston shooter. He had been arrested for a felony drug charge and for a trespassing charge and had never been locked up. So we can't just say free the people who are doing drugs. There's got to be some sort of monitoring. There's got to be a way to make sure that these people are not dangerous, that they're not going to go on and make us feel less safe.
There's a political gambit here too, and it's been going on for a long time, particularly in local areas, and that's giving felons the right to vote. You just kind of brought it up. Now, for a long time, I was against this, and I had ex-felons a right to vote, and I had a great conversation with Dog the Bounty Hunter. He had gone to jail for a murder charge, and he felt like he had done his time and he should have the right to vote. And here's the thing, Dan, maybe I'm softening up a little bit, but I think if you committed a crime and you hurt someone, and they're still hurt physically or they died, you should never have the right to vote. If you sold weed, maybe you should.
Yeah, I mean, there's definitely a difference of what crime you should be in jail. I mean, I also want to point out to you, no bankers have gone to jail. Maybe they should make some room. But
they should, but they keep paying off the fines with shareholder money.
But you know what? It's the weak ones, the ones without the money, who can't afford the attorneys, that are ending up in jail. You know, you even have, as you know, ex-husbands who can't pay their child support. They're in jail. What is that going to do to teach them or help them and rehabilitate them? The system is just as backwards as the government. It works the same way.
So let's say we do soften it up. Does everyone here think that it will actually have a positive impact on the economy or a negative impact on the economy?
To me, it would be a positive impact because you've got people in jail that are really not that criminal. They're just used as examples. The IRS is doing it with people, famous actors and actresses, going after them as examples. So you've got people in communities in jail as examples to deter other people from doing the crime.
I assume you agree.
If you're in prison, you're not in the workforce. If you're out of prison, you can be part of the workforce. What happened when women went from the home into the workforce? Boom, long prosperity.
Well, that's very different. That's not an analogy that makes much sense to use.
If you have people enter the workforce, that's a good thing.
Criminals are already disenfranchised. Criminals already are not part of the society. Now, there's one thing, again, lesser charges, lesser crimes, but we have to keep the schools, the communities safe and start rebuilding.
All right, so that brings us to our next real deal. Peace and prosperity, the trade, right? So far, you know, when you look at that Gallup poll, we only put a few things up, but you can see clearly at the top, we're worried about our credit cards. We're worried about cybersecurity. We talk about that on the show a lot. You guys are heavily invested in those areas, but there probably matter some other areas. If we're talking as, you know, crime and punishment, how can people maybe invest on that theme?
Well, I think the average American says half the prison down the streets and we're going to let half the people out. What are you going to do? You want to lock your doors. So, like, I think...
Or you may move. I'm going to call a U-Haul truck. I don't know.
Fortune Brands Home and Security, FBHS, Master Lock. There's obviously a lot of security for homes. I think that's a good way to play it. Also, the boom in housing needs some cabinets as well. So I think it's a double play.
RGR, Sturm Ruger. The key is have more guns, have more firearms, and for that matter, Cabela's CAB sells guns.
Yeah, and they also do a lot more than that. I've been in Cabela's a lot, but I think my subscribers are right now wearing Smith & Wesson. So I understand your theme there.
Well, the gun's a little bit of an issue, but you just drive around and you can see all the signs on everybody's property. So ADT is one of the biggest national companies where they protect your home, smoke detector, emergency if you need to call. They've got a whole network system designed to protect your property and your items And
it's huge.
It's not just theft, but fire and all that.
Also, when Amberella reported, you can see the cameras, anything involving cameras and security will be absolutely huge. Now, I want to talk about something else along this crime and punishment theme. Brings us to our next real deal. The Obama administration, they've shifted gears. They're not going to prosecute families that pay ransom to terrorist groups. Now, I think I might be the only one around here who thinks that's okay, and I'll tell you why, but mostly because the administration isn't doing enough to protect people in the wrong places in the first place. Now, I'm not talking about corporate workers who work in Europe. I'm talking about people who go to places where they're harmed by ISIS and other terrorist groups. We talked about this yesterday in Outnumbered. Here's what I had to say. Why don't we just crush ISIS once and for all? If an American family can afford to bring a loved one home, I don't have a problem with it. My problem is how the hell did we get here in the first place because of this fickle policy where the administration doesn't know what it wants to do with an enemy that is in 4 countries right now and wants to kill all Americans. Well, now, you know, we had Rudy Giuliani on Heather saying that you don't negotiate. And I don't think you negotiate in general, but I do know that part of ISIS's business model is to kidnap anyone they can, and if they can't get ransom, behead them like this terrible video that came out overnight. Right. From a legal point of view, the idea that the U.S. won't prosecute, does that make a difference here? I
mean, listen, they haven't been prosecuting. I think President Obama said that today in his speech, that while we haven't been prosecuting in the past, now we're having a systemized situation where we're not going to prosecute in the future. I think ultimately it doesn't change anything. I agree with you that if you have the money, it's different between what Giuliani said. Sure, the government shouldn't negotiate, but if you as an individual have the money to get your family member home and the alternative is beheading, I think that everybody has the right to go ahead and do that.
I'm on the same page with both of you. I think, you know, if you have the money, the ability, the one thing that concerns me, though, is I think about South America, where, you know, those groups go after, obviously, the expats or the very rich people there, and it's normal to just have this kidnap for $1 million, give the kid back.
Yeah, when I heard the story, Hillary, I thought it was specifically the Middle East hotspots, Syria, Iraq, Afghanistan. I wouldn't extrapolate it on beyond those. I think those are specific areas of some young kid say, hey, I want to go help those refugees, and they get stuck out there, and the administration's fumbled all of these. They've done a terrible job first protecting them. I don't know what their plan is to defeat ISIS. They're going to be beheaded one way or the other. So I don't know. I don't see why we would stop these families.
Well, the families need to do that. They need to get involved personally. It's the only way, and then they can, you know, kind of plead mercy. But also in countries other than the United States, kind of your point here, it's a whole business negotiating with terrorists because there's
especially in South America, Mexico.
Yes, and I've spent 10 years in South America, and there's a whole business around it. There's some countries like Venezuela, they just shoot you and they want your watch. There are countries like Colombia, they kidnap you, someone comes in, they negotiate. It's like an attorney who specializes in
this. But see, that's what Giuliani is saying, is that if we start to negotiate, it will embolden them. It will create more kidnappings.
Probably.
Again, no, I'm not talking about some worker working, a Procter & Gamble worker in Switzerland. I'm just talking about these few hotspot countries where there's no real policies, there's no real effort to quell the terrorists there. But we have seen some horrific images.
I mean, if more people negotiate, then it's going to incentivize them, sure. But I think the question is basically, are you going to add government punishment on a family that's already suffering? We're talking about a very small number of cases anyways, so I think it's smart to remove government. You were talking about Obama. I'm not going to defend the Obama administration here, but let's remember every single administration has had a hell of a bad time trying to deal with hostages. Ronald Reagan had some hostage issues, if you might recall. Jimmy Carter had them. Bill Clinton had them. We've forgotten about that too. It's actually a hard problem. It's okay for us to admit that it's a hard problem to solve.
Well,
it's a hard problem to solve,
Reagan did solve it, though. He solved it his first day in the office, and it was really a Jimmy Carter
There was this
problem.
Iran-Contra thing, you might have recalled, where we were selling weapons illegally to try to free up hostages. So, I mean,
it's difficult, and it's probably more difficult to a certain degree because of public opinion. But, I mean, we've got such a wishy-washy position to begin with that you talk about emboldening ISIS with ransom. I feel like we've emboldened them with our hands tied behind our backs.
So I go 2 points on this. Number one, we have a very weak administration, so we don't know the policy of how they're going to handle.
There is none.
Well, that's what I'm saying. So basically what he's done is transferred it to the individuals.
Which is kind of despicable.
And he's crossing.
The idea that, hey, you know what, we don't know what the hell we're doing.
That's what he's done. Remember,
I agree.
He apologized to the whole world about the United States. Why would this be any surprise to you? So he's crossing individual lines with political lines. And he doesn't know where the line is because, remember, he puts the line in, they cross it, and he keeps moving the line. Right. So now he's saying, all right, you know what, if your child is kidnapped, then it's we're not going to prosecute you for you to take care of it because we don't know what to do.
I got to tell you, there have been some instances where the families have been in better contact with the kidnappers than the U.S. government, which is a shame. All right, Matt Welch, thanks a lot for joining us. I just heard the warden of Rikers Island's waiting for you in the green room. All right, Summer Kennedy. I know you guys know who she is. She's the 2014 Playmate of the Year. Guess what? She's also a fierce day trader. She gets up at 5 a.m. in Los Angeles and she starts to share her ideas on Twitter. Some people say it's a sign of a market top. I don't think so. What do you think is the biggest sign that this market's ready to pull back? Summer Kennedy, big boys like Carl Icahn ranting, the Fed rate hike, or some other black swan? I want to hear from you. Tweet me at CB Payne. We'll be right back to talk about a horrific day in the market. Welcome back to our next Real Deal. Okay, a busy morning, right? The GDP report came out. It was revised more or less in line with expectations. But beneath the surface, a couple of good signs of strength. Consumer spending went to 2.1% from 1.8% in the initial report. Investing in our homes. This is a big deal, up 6.5% from 5%. Joining the panel, Paul Dietrich, Fairfax Global Market CEO and CIO, joins us. All right, Paul, we saw that. We saw the market sell off 178 points. Any changes in your thinking? Because on one side, we see more anecdotal evidence. Maybe the economy is turning, but the market looks vulnerable.
You're exactly right. Basically, we have to separate the economy from the stock market. If you look at
a lot of people say it's already been that way for a few years.
It has. But you look at all the economic indicators seem to show a kind of moderate expansion of the U.S. economy. However, the problem I have is that if you look at earnings, they're either plateauing or going down. You look at revenues, they're going down even faster. And one thing I've learned over the years in the stock market is the stock market follows earnings.
It does. It's not a harbinger of things to come. It actually, in this case, you say it actually follows earnings and doesn't predict them.
Exactly.
Okay. All right. What do you think, Hillary?
Well, I think that there are always pockets where it makes sense to still invest. And given these new numbers, I think we have to look more at specific stocks and within those stocks, those sectors, and not necessarily earnings. Like today I was looking Whitewave, WWAV, and Hain, Hain, organic food stocks. They're hitting 52-week highs. They're doing well. So within any market environment, you are going to find
so
areas
you still chase stocks that are breaking out or making new highs, even with the broad market looking a little weak.
Even though I'm a macro investor, a catalyst investor, I find technicals always work. They're telling us something. Earnings, yes, sure, tells us something. But stocks that go higher are telling us something. Facebook went higher today.
Well, I know I sent an alert today to take profits on Goldman. We had a big gain in it. And I know you like the banks. Yep. I felt like this is one of these things where maybe the banks have run up in anticipation of Fed action, and we'll get the old buy the rumor, sell the news kind of reaction. And I wanted to raise cash also. So I made some moves. We closed out at 3 or 4 positions over the last 24, 48 hours. I like to have cash because I don't know where this market's going near term.
Yep. We have some cash, so we're ready for that. We didn't sell anything today to make any major moves. I agree with Tilly. I love the fact Facebook broke out. We bought that 2 weeks ago. And looking yesterday, yesterday we had the retail index at an all-time high, internet index all-time high, biotech's all-time high. So we're one day off an all-time high in some very high momentum sectors. To me, that tells me things are pretty darn good. We haven't had a 1% move on the S&P daily in 8 weeks, the longest in 21 years. I look back the last 50 years that this has happened. Not one led to a crash. And a lot of people are saying that means a crash because we're not going higher. To me, it's a calm before the next breakout, not the calm before the storm.
I got that on Twitter. Oh man, Charlie, the market's so volatile because a triple-digit move on the Dow at 18,000 isn't the same as 6,000, and percentage-wise, but still people are antsy, Dan. There's no doubt about it. It's palpable. You can feel it. People are a little bit worried.
And you can see it in the price action. This is going to be the new norm going forward. You're going to see 150 to 250 point days. It happens overseas. It happened in Japan when their index fell. So this is going to become the volatile market that people were so used to as the Fed kept it calm and kept the volatility low for years with this spread.
Could that volatility spark, and I'm getting a rap signal, but I got to ask you, could the volatility itself spark selling?
Well, yeah, absolutely.
Just greater gyrations,
because people will
triggering
not
selling.
be able to stomach those kind of volatility moves.
Or create opportunity, too.
All right, guys, let's leave it there. Stock splits, now they're making a big comeback. Listen, they've been scarce over the last few years, but now the hottest companies in the country are doing it. We're going to tell you exactly what it means, because I don't take for granted that everyone truly understands it, because there are a lot of factors that involve it. The most important, should you chase them? We'll be back in 3 minutes. All right, it's big news because of Netflix, but I got to tell you something. They have been around forever. In the 1990s, in fact, stock splits in the S&P 500 averaged 64 splits every single year. Of course, in recent years, we haven't seen that many of them. It's become somewhat rare, but let's face it, we had a big market crash, and you didn't really need to split down there. Also, there's a sense by some companies that they really wanted to avoid an increase of individual ownership and the wilder gyrations that generally come with this. But I got to tell you something. We know that stock splits, with respect to the announcement, don't change anything. So you have a company, you had 10 shares of a stock. After the split, you have 20, right? 1 for 2. Price goes from 50 to 25. The bottom line is what you hold was worth $500, and it's going to be still $500. But when the news hits the street, the stocks do move on the news, and more often than not, they move higher. Now, there's been a lot of research into this area. Let's take stock splits, and there are two things you got to consider. There's the move before the split. 4% before the split takes effect. So usually 31 days into a split, you're going to get a move up 4%. Then there's the move after the split. A lot of research on this. For the most part, this is what you'll see. 8% higher than all the similar stocks or companies in that same area 1 year later. Go out 3 years later, they're 12% higher, usually than their peers over that 3-year period. So for management, what are some of the other reasons you may want to do a stock split? Let's face it, it's a victory lap. My stock has gone to the moon. We're a great company. We're killing it. We're killing it. It's a victory lap. Also, the notion that the stock is cheaper is going to bring in more buyers, and that also works. In the end, forward stock splits are associated with successful companies, and the more often than not, guys, when they happen, it's been a real good thing for individual investors, and that's why a lot of people jump on it, right? It's not the hot IPO that you couldn't get your hands on. It's out there, it's democratic, and you can buy the stock. So what do you make of this, Matt? You know, because they're coming back. Apple had a 7-for-1. Stock's up huge since then. Netflix was up big. Carl Icahn dumped it, sort of rained on a parade, but I got a feeling that's going to go up too.
I hope you're right, because you know, I have CF Industries, which did a 5-for-1 just earlier this month, and it's been kind of going sideways. But it makes complete sense because it's marketability, it's liquidity, it's more attractive to individual investors. I see why that happens. I didn't realize, though, it went up before that and after. I mean, that kind of, because I always had the mindset that after the stocks would happen, it's kind of buy the rumor, sell the news. It's already baked in. It doesn't go up, and that really surprised me.
Although that's when the individuals start to buy it, right? Yeah. Because few people are going to buy a $700 stock, Paul, but $100, okay, I'll shell out a few bucks.
Yeah, I mean, the research is exactly as you've explained it, but this really is kind of market timing. This isn't investing.
Isn't that true, investing 101? No. You don't think, though, that strong companies are the ones that do these splits, and just by virtue of the fact that they're a strong company, may be worthwhile to invest in them?
Yeah, no, if you're investing in them because they're a strong company, that's investing. Right. If you're investing in them because of a stock split, that's timing.
Let's leave it right there. All right, the stock market is about to become the wild, wild west. We're talking tiny companies, a lot less scrutiny, going public. I mean, it's a whole lot more risk, but also maybe more opportunities. We've got the architect of the whole thing. He's going to join the panel next. Welcome back, everyone. Joining us now is Ryan Feit, CEO and co-founder of Seed Invest and one of the architects of crowdfunding. Ryan, you've got some things going on that I want you to help explain to the audience, because I think we're on the cusp of a major revolution in investing opportunities for investors, small investors and small companies, but explain how it works.
Sure. So this is a big deal for investors and companies. Basically, for the first time, companies can raise up to $50 million from all investors, not just VCs. And for most of the country out there, it represents the first time that ordinary investors can get into companies before the IPO.
Now, and they don't have to necessarily be accredited either. I mean, this goes back to what they call the Jobs Act. Yeah. There have been a series of new rules opportunities that have evolved from this. And one means that you don't have to be an accredited investor, which is 3% of the population. Everyone gets a chance to play. Sounds like a lot of fun. So what's the risk?
Yeah, so investing in startups is risky. And there are a couple things that every new investor should take into account. You have to diversify. So if you're not going to build a portfolio of at least 10 companies, you shouldn't be doing it. Secondly, it's not like public stocks where you're planning to sell it the next day. So plan on investing for at least 5 to 7 years. And then lastly, although it is a good idea to get maybe part of your portfolio into startups and small businesses, no more than 10%.
What's the exit strategy? Okay, I'm a seed investor. I feel great. I invested in this lemonade stand and went national, went international. We're rocking and rolling. How do I get my money out?
Yeah, so over time, there will be a secondary market that develops, but it's not
like a trading market, though, like a stock market. There'll be symbols and everything.
Over time. But today, it's not there yet. So honestly, you're waiting for the company to either IPO or get acquired. So you're betting for the long term.
I've got to ask our legal expert, because it does sound like, to a certain degree, listen, I think there's a huge void that was left when the penny stock market collapsed. I do think there are a lot of good companies that need to raise $10 million. Goldman Sachs doesn't want to hear from you. Yeah. How do you go out there and raise this kind of money, and how does the average person get an opportunity? But there are obviously huge risks, and certainly has to be some legal issues.
Well, and that's why you've got people who were sort of against this, like the AARP, were worried about these small-time investors who are going to end up getting in big trouble. The idea is that you have to do your own due diligence. Ultimately, you as the investor are going to be held responsible for whatever it is you're investing in. As far as the law protecting you, the portals, the website type of deal where it's set up, they're supposed to do due diligence.
You do the due diligence?
Yeah, at Seed Invest, we do all the due diligence. We've had 4,000 companies apply since we started out. We only take 1%.
If you take 1%, I'm sorry, I'm going to ask you, by accepting these companies, are you de facto pitching them then? Are you saying,
we're giving investment advice, but we're very specific with all investors that, to your point, Heather, you should do your own due diligence on top of that and make your own decisions.
And Ryan's company is unusual in that respect. They don't all do that. So you need to be very, very careful. You need to look into the portal that you're using as well as the company that you're investing in, because otherwise...
Are you getting paid by these companies? So the 4,000, 1%, are you getting paid by that company to allow them to be on your portal?
Yeah, so we actually don't charge investors anything. So no management fees, no carried interest. We charge companies a small commission based on what they successfully raise through the portal.
I think this is a brilliant idea, because in my experience investing in companies that are startups, I have seen over the years real money is made this way. I looked at Public Storage, PSA, now a $32 billion company, didn't have the ability to go out there, went to those that had some money, some principals like myself, for people to be able to invest in there. Dish Networks started this way.
Sure, Charlie Ergen was selling those big satellites door to door. Someone opened the door and said, hey man, I like to back you. If everyone could open a door and find the next Charlie Ergen, it'd be fantastic.
Right, and this is the great equalizer, and it lets those of us out there that want to make those investments discernibly look, know there's great risk to it, but it's an opportunity to get in on the ground floor.
You've been involved in stuff like this, right, Paul?
Yeah, if you look at, the British were a bit ahead of us. They had the alternative investment market, the AIM market, and about 3,600 companies have gone public over the last 10 years, and they've done very well. But what investors, Ryan said it right, you have to have a diversified portfolio, because the facts are, a third are going to go under, a third are going to get your money back, and the other third are going to make it all worthwhile because they're spectacular. And yes, there is risk, and yes, some of these businesses will fail, and guess what? It's called capitalism.
So you are actually becoming the individual, Ryan, before we close this up, is becoming a venture capitalist. Those people with these giant yachts that we wish we could be, now we can take a shot and be them.
Yeah, absolutely. So for the last 2 years, we've allowed accredited investors to invest directly aside venture capitalists at the exact same terms, and now we can open it up to everybody.
All right. Hey, Ryan, great stuff. We want to have you back on often and talk about this, because it's different than Kickstarter and all the other things. People actually have a piece of the company that they're putting money into. I can't wait to see how this works out. Ryan Feit, thanks a lot for joining us. All right, Kennedy Summers, something tells me that Matt McCall knows the name. The 2014 Playmate of the Year, also a fierce day trader, getting up at 5 a.m. in L.A. She's tweeting, she's sharing trading ideas. Here's the thing. Some people say, oh, my goodness, that's not a good sign. What do you think? What's the biggest sign that this market might be ready to pull back? Kennedy Summers trading, the big boys like Carl Icahn warning, the Fed ready to hike rates, or some other black swan we don't know about? I want to hear your thoughts. Tweet me at Twitter, CD Payne. We'll be right back to try to make you some money. It's right here. Hillary, pay your interns. Yeah, I know nobody else does, but you want to be the champion of the common people. The young people that work for you says they don't buy it.
time for Upon Further Review.
Like I just said, the headline said it all. Hillary, pay your interns. USA Today had an op-ed criticizing a former senator for failing to pay her campaign interns. And the author tells Hillary, you know, forget about the arguments about minimum wage. I can't even get a wage. Now, you know, Heather, it's not uncommon, right, for these campaigns to have unpaid interns. But this particular woman said it was more than that. She was a fellow. She had an elaborate screening process. She had interviews. And at the end of the day, she says that Hillary's perpetuating the exploitation known as unpaid internship. And when she found out, it was like discovering Santa Claus wasn't real. Was she?
I read that.
Yeah.
So listen, that's a little bit of hyperbole. There's a whole issue right now about unpaid interns. It's going on in litigation. The different courts have found different things, but there's 6 different things that the courts look at to see whether or not you're actually an unpaid intern or if you're just free labor.
Right, but one thing the court may not look at, but the court of public opinion, if you're running for president, Hillary, maybe you want to pay interns if you want to be the champion of fast food restaurant workers. Listen, she hasn't driven a car in 20 years. She made $100 million. She has some dubious accounts. She erased her emails. Are you serious? You want to be the champion of the little people, but your record says you took advantage of them?
She should be paying the interns. Even if it's a minor amount, even if it's a stipend, they should be paid. The problem today is there's so much labor out there. Parents are so willing to do anything to put their children into a position.
I'm talking about someone who's the Democratic lead. Right. 92% of Democrats said they would vote for Hillary Clinton. I mean, this is, and their beef is that something's wrong with capitalism, that the greedy are making too much money. Give me a break.
Look, the liberals are just hypocrites on this issue.
I always get confused when he says that because he's got that liberal haircut.
They are just hypocrites on this. But the fact of the matter is, being an intern, you're actually going to school to learn something. Now, we pay to go to colleges. I think the interns ought to be paying to work at most of the businesses.
That's probably what Hillary told her, too. What do you
Listen,
think,
I've had 2 internships in my career, and I didn't get paid for them, but I learned a hell of a lot. I mean, you know, the interns, but on the other side of this coin, in this kind of environment, in this economy, not paying these people means other people are not getting paid also. Right. So you're getting free labor, keeping people out of the workforce that want to work.
And again, we are talking about someone who's running for president.
The majority of the Congress has unpaid interns. You know, the thing is, this is not going to change by any act of Congress. It's going to have to be the courts if it changes. And unfortunately, I do think that internships can be a huge benefit. But I think that the problems that we're seeing with them are going to lead to them
not. And that girl chose to do it.
Anymore.
She chose to go through the interview process knowing she wasn't getting paid. I mean,
well, she said no. She said when she found out, it was like finding out Santa wasn't.
I don't know about that.
All right, guys. Anyway,
sign a statement that this is educational.
I've always paid my interns. All right, maybe I should run. Hey, coming up, we've got an Ask Payne speed round for you all day long. Great questions. It's not too late. Keep them coming. Tweet me. I'm at CV Payne. Time now to answer your questions about the market, individual stocks, strategies, industries. That's what we're here for. You can always ask me and the panel. Alex tweeted me saying, I started working and I'm a starter in the market. Saw your advice on Lazy Boy. Any more advice for starters? I would start to round out the portfolio. By the way, I still like Lazy Boy. You know, we've been talking positive about the housing market. More great news. Lennar had a great number today. But also, as a starter, don't make the classic mistake of buying one stock and seeing how it does and not truly being committed and rounding out your portfolio. Lazy Boy, what do you think of Lazy Boy?
Buy Lazy Boy. Earnings went to $20 million the last quarter versus $12 million the year before that. Upholstery's doing well, all of their divisions. It looks like good things are ahead for Lazy Boy, and it fits with a demographic.
Yeah, and it's not that old school Lazy Boy stuff, too, you know, like that's in your grandfather's garage. All right, Mike was asking, hey, where do you see Sears in the next year or two? Attractive put option for January 17 at 15 strike for only $100. I'm a little leery of these elaborate option strategies, but I'm one that, listen, Sears should be out of. It reminds me of that old Russian store. What was it, Goom or whatever, that old Russian department store that never had anything in it but tumbleweed? I don't know how they keep going, except my brother does go there a lot. But that's not a good enough reason for me to be in a stock. I would short it. I wouldn't have an elaborate stock option strategy, Dan.
Yeah, I'm not an options player, but I don't like being in that option. I think that price is way too low, but I'm not bullish on Sears at all. I think Eddie Lampert's got a big road in front front of him. I think there's troubles in that whole industry, and I don't think he can get that ship up right.
Okay,
He owns a lot of that stock.
He's going to have rabbits jumping out of the hat that he's going to pull out. That stock's going to go up. So anyone who wants to play around,
I think it would have happened.
stay out of it. Go find a retailer you think that's going to go up.
He's defied gravity with this stock because this should have been kaput a long time ago. It's financial engineering, I say. David is wondering, is Ally Financial a good under-the-radar financial to play higher rates? They also have an auto loan business. I do wonder, though, so many of these auto loans are subprime loans. Remember, Ally didn't necessarily do well with the housing business that it had. I don't know. What do you think of this?
I'm okay with that. I don't know if it's under the radar. It's gone from 18 to 23 in the last couple of weeks. I mean, the thing's been taken off. I like it, though, because I still think as interest rates go up, the margins get better for this because they lend, and I'm okay with that. I'd ride it.
All right, let's leave it there. The Villages in Florida, guess what? It is the fastest growing metro area in the entire country. It is not the only senior community that's rocking and rolling. You want to be a baller in your golden years? You better sit where you are right now. You don't want to miss this. We'll be right back.
Neighbors stroll the old town square, and the good life is in store. The Villages.
I got to tell you something. I think this theme song really worked because, you know, from July of 2013 to July of last year, the Villages, the fastest growing metro area in the entire country. Look at that at the top of the list. It's not the only one. Every one of these were in the top 22. These are all senior living places, and they're all over the place. For instance, there's a $77 million, they call it the Belfour Complex, being built in downtown Denver. It's got a 24-hour concierge, gourmet meals, a penthouse bar, and there are 20 others just like it springing up right in the same area. Now, the problem is right now, unfortunately, is that too many people currently in the workforce can't even dream of balling like this in their golden years because look at this. Only half of them think they'll have enough money to live comfortably, not even like big, you know, driving $25,000 golf carts. Like anything else, if you want something in life, you have to make it happen. So what actions can working people do right now so that they can live in comfort, or let's take it to the next level, live in a hot senior community? Is it too late to do it via the stock market? I say absolutely not. But the panel may have other ideas. Let's find out. All right, guys, the Villages. I got to tell you, Googling that, man, there's some great, great stories. So what do we do right now? Well, Paul, you've given some speeches down there. The average person right now, 40 years old, forget about living on Social Security. They want to go out there and they want that $25,000 golf cart chilling on at the Villages. How do we set that up?
Well, you know, I think the stock market is the place to be because as you start seeing people becoming more and more middle class in Asia and other places, they're going to be buying more and more of our products. You're going to see an economic expansion, which is going to drive earnings over the next 10, 20 years. And I think we're in for a long-term secular bull market. And yes, we will have bear markets and recessions, and you just got to live with them. But it's going to be up like we saw in the 80s and 90s during that period of time. You've got to stay in the market, and I think
ride
that's
out
the
these
key.
bumps in the road. What do you think?
I think that, well, of course, number one, equity investing, but also be very discerning. It's very easy and tempting to give money to your children, to private school for your grandchildren, for pre-K. And there are all sorts of things that seem to be important, but you have to measure that with taking care of yourself.
You're saying think about yourself instead of these ingrates that after you put all that money in them, they're not even going to call you, but once a year maybe send you a card?
Exactly. And it would be a lot more fun to be able to play shuffleboard and, you know, golf and all that. What are they, bowling down there?
A lot of other stuff goes on.
Right now, it would definitely be 60% stocks, 20, maybe 10% hard assets, 10% bonds. I'm not a bond guy. I know you like bonds.
Well, no, hold on. No, for a trade.
Okay.
But in this scenario, there are wonderful ways to build income growth portfolios. In other words, you start with a base and you look for income, and you want certain stocks that their dividends or the income from these investments are going to go up with time.
Solid blue chip names.
But not just blue chip. There are a lot of great companies that pay dividends. There are a lot of great REITs that pay dividends. And build yourself something that's going to continue to grow and monitor those pieces in diversification. Because income is more important than just assets.
I think there's two words, early and often. You want to start as early as possible. If you're 40 years old now and you haven't started yet, start today, or start yesterday, actually. And often, consistently put money away, every paycheck, every month, whatever it may be, not only your 401k, but into another retirement account, and just keep getting into it. And you will be amazed in 5 years. It's like going to the gym. The first couple of weeks, you're like, my God, nothing's going on. But then after a while, you start seeing results. Same thing with the stock market.
Isn't it about delaying gratification? Because so many people now aren't willing to do the saving. And the other thing is, I hate to be the party pooper here, but we've got to remember that the retirement age has to be pushed back because we're going to live longer. So we're going to be going to these places a little bit later than some people might be thinking.
I think at the Villages you can start at 55, although I read a story about a wayward 49-year-old. We'll talk about that later. Time now for the marching orders. All right, we were asking, what's the biggest sign that the market could be ready for a pullback? Kennedy Summers, the playmate who's trading like crazy. Big boys like Carl Icahn going on TV every day screaming, the end is near, the end is near. That Fed rate hike, you guys always tweet me about that one. Or some other black swan events. I will tell you right now, I think maybe we could pull back a little bit, but Kennedy Summers, in my mind, isn't a red flag. I like to see people in the market. I'm not a big day trader, but at least she's in the market. What are you most concerned about?
I'm most concerned about the black swan, like such as Italian or Spanish bond yields starting to go through the roof, liquidity drying up, something starting in Europe, maybe starting in China, and then hitting us.
Greatest risk, Paul?
I think the plateauing out of earnings and the revenues going down.
And maybe margin expansion, right?
And
Margins don't have a lot more room to expand. I know you've been saying it's sort of the same thing that Hillary's been saying. What are you worried about, Matt? Because you've been like the most bullish on the show.
I am not worried about Kenny Summers, I'll tell you that. Holy smokes, I'm going to start following her on Twitter. You know, I think the black swan would be the thing, but the problem is you don't know when a black swan happens, you don't know what the black swan is. That's why it's a black swan.
Well, the good news, Matt, is hopefully you won't take next Monday off because Kennedy Summers will be on the show.
Good for her.
Oh, yeah, right.
She's writing a book, right?
She's writing a book on investing. Hey, by the way, you were fantastic. Thanks a lot, Heather.
Thank you. Thank you.
We really appreciate it.